Hey everybody, Gary with Basecamp Trading. Let's take a look at the ES today. We had a really strong push to the downside in the ES. This is our 240-minute chart, and we had some bearish signals off of this chart. Now this chart was making a lower low, came here and made a lower high, and then we pushed down. But we pushed down, we pulled back right in here, and you can see that on this initial push down, 5 and 13 crossed to the downside, fast and slow line on momentum crossed to the downside, our histograms went real bearish, and then we made this pullback, and this is a pretty decent pullback. We had a pretty decent rally back, and our histograms kind of flattened out. Fast and the slow line actually crossed to the upside, but then we put in this one green finger right here on our histogram. At the same time, we had this doji right there. We set up that one green finger. The next bar was a reversal doji, closed with a red finger. So this is a very bearish pattern. We have price pushing down, kind of pulls back, consolidates. We get one positive histogram and then right back to negative. And that's exactly what we had here. We had a push down, consolidated, pulled back, and then another pretty strong push down. We triggered this reversal doji right there. We triggered that under 33.32, and that was good for a 50-point run to the downside in the ES, or $2,500 per contract. And then these are the kind of days we like, because we had a very bearish 240-minute chart with a very bearish pattern. We had the one green finger. We fast and slow line on momentum crossed to the downside, so we were confirming the triggering of the one green finger and the triggering of the reversal doji. And then that put us in confluence with our 30-minute chart. You see our 30-minute chart, we just kind of chopped sideways, and then we had a really bearish bar, caused 5 and 13 to cross to the downside, set up the bear flag. We're triggering that continuation doji on the 240-minute chart. So now we have confluence. We have a very bearish 30-minute chart. This bear flag's being confirmed with momentum. You can see we're triggering negative momentum. This bar caused 5 and 13 to cross to the downside and the fast and slow line to cross to the downside. Turned our histograms bearish. We pushed down, triggered the bear flag, pushed down, consolidated just a little bit, had a bearish inflection for another really strong push to the downside. So on days like this, when we have real strong confluence between the 240-minute chart and the 30-minute chart, these are the times we look for these larger moves. And again, potentially, all depends on how you traded it, potentially $2,500 per contract or somewhere near there. And you can see kind of what that looks like on our Renko chart. Right in here is where we had that really bearish bar to the downside, put in the reversal doji, triggered that to the downside, consolidated. Now, you may or may not have got short here if you're trading this chart. This was a little congested right here. We pushed down, but then we got the Trender Pro 2.0 signal off the 18. Nice push down off of that, little pullback, another Trender Pro 2.0 signal off the 18 for that final push down. So several different ways to take advantage of the bearish confluence between the 240-minute chart and the 30-minute chart.